Well, all right, all right, all right. I am here again with you, and I am your best friend. I am your new best friend in stocks, dividends, and options. I wanted to check in with you on this video to discuss the trades that we have expiring on February 10th. So that'll be coming up. Here they are. A lot different than the trades that were expiring on 2/3. Look at that. What do we have, like 70? No, we had 98 contracts expiring February 3rd. And what we have for February 10th is how many? How many contracts? Why didn't you add it up beforehand? 31. So 31 contracts currently expiring because, we still have a full week of trading to go before this expiration. Probably do some short-termers coming up Monday, Tuesday or so, depending on what the market's doing. But here we have Intel, Devon Energy. So we got one big call trade here that I'm a little concerned with, because if you see the strike price is $30. We have 11 contracts, which represents 1,100 shares. And currently Intel's at like $30.44. So that's really the only one that I'm currently concerned with. Devon, I think, is going to go back up next week because it's just over $60 a share now. I'm not overly concerned with Devon. I think oil, gas, those things are going up next week. 3M, these are really low. Those should expire worthless. So all that money will just go into our pocket. Little pocket change. Here's a 58 Devon, 88 Google. I don't think we're going to hit 88 on Google next week. Blackstone 85, probably not happening there since it is at over $100 now. 96 on the Amazon. We could see that depending on what the market does, but we'll be fine with owning Amazon at 96 at this point. McDonald's 255. All pretty safe as far as just collecting the premium. What is that premium? Let's take a look. Get a little summary there. Get out the abacus. Beep, boop, boop. So we got $1,231 of premium so far that we've collected with contracts, option contracts that's going to expire Friday, February 10th. So I was thinking about this Intel. So if those get called away at $30 a share, 1,100 shares, that'd be $33,000. What would that look like? So I put together a little spreadsheet for my own benefit, and now I wanted to share it with you. Here's where our position started with Intel on Halloween. We bought 175 shares, and then towards the end of November, 125, 100, 300, 100, 300, 100, for a total of 1,300 shares. Here's what we paid on those days. So all in, we had an average cost of about $28.40 per share, $36,926.11 invested. And then I inadvertently was not paying attention to a very weak and light call option that I had, I should say, that was called away, 100 shares at $27.50. So that represents this number here. Where was that call? Right here. And I only made $10 in premium. I don't know what was going on that day, but I obviously wasn't paying attention on that expiration. Those were called away because I would have rolled that. And then on this coming Friday, if we do indeed sell the 1,100 shares at $30 and collect the $33,000, we'll still own 100 shares at the current rate of $30.44. If we add those three numbers together, we'd be in a position of $38,794. So I wanted to see, well, what else do we have? We've got some dividends we collected on December 1st, $63.88, along with a dividend that we're going to collect on March 1st. Well, wait a minute, Bart, you won't even own all these. Well, technically, or no, we will actually not own them if they do get called away. We will not own them on March 1st, 2023, but we will own them on February 6th. And February 6th is a very important day, of course, because that's ex-dividend date, expected dividend date 2/6 with a record date of 2/7. And then there's our payout of 3.1. So we will still own all of those remaining 1,200 shares on February 6th. That will lock us in to receiving our dividend at 37 cents a share. So if we go back up here and look at that dividend, we will collect the $444 on March 1st for a total of $507.88 in dividends. And then I looked at, well, what were all the premiums? How much premium do we pocket during all of this activity? And it was these numbers right here. We had a call, some puts, a call, a couple of credit spreads, some more calls, the big call. So on the options that will expire, the $30, 11 contracts that expire on February 10th, we did collect a nice $462 juicy premium, but we have a total of $987 in premiums that we've collected. So if we add these three numbers up, the $38,794 plus the $508 in dividends, $987 in premium for a total of, drumroll please, $40,289. And then we have our cost right here of $36,926 for a profit of $3,363. That's not so shabby, Bart. It really isn't. That could buy Sparkle Barbie some, nice jewelry, a little bit of jewelry. But we're not going to do that, right, Bart? No, we're not even going to tell her. Oh, that's actually not true. I actually shared my handwritten version of this with Sparkle already because she said, you could trade all the stocks you want, Bart. Just remember rule number 1, don't lose money. I'm like, oh yeah? Well, what's rule number 2? Remember rule number 1. So she told me I can't lose money, so that's what I'm attempting to do. So we got a profit here, potential profit of $3,300, $33.63 on the Intel. So, and that's in 103 days. So if you go back from October 31st, when we first entered our position, our very first position, all the way through February 10th, that's 103 days. So that would be, if we look at the return on this investment here, 3363 divided by 36,926, that's a 9% return in only 103 days. And if you take a whole year's worth of days in that 365 bar, it is, and divide it by 103, that's 3.5 times, technically, 3.5 times we can do this type of investment in a year, which would be an annualized return of 31.5%. So, of course, that's that old pie in the sky, crazy calculation abacus, the actual return right now in our face, if indeed these shares are called away, would be the 9%. And you know what? I'll take that and a bag of chips. But what I do predict happening is I kind of feel like by Friday, this coming Friday, that Intel is going to be below 30 just because we've run up on that ex-dividend date and those dividend hounds are out there making sure they own it through the dividend date so they can collect that juicy premium. What is that premium, Bart? The premium is $4.82, so that's very nice. So we want to get our hands on that. We've got 5-year growth on that dividend of 6.26%. They do have a fairly high payout ratio, 79% right now, but fairly safe dividend coverage at this point, in my honest and accurate opinion. But again, if we were to make a prediction, and you're going to see whether this ages well or not, I have a feeling that Intel is going to be under $30 on Friday. So we'll get to keep our 1,100 shares, which is just fine with me. We'll just keep trading premium and collecting the divvies. So just checking in with that with my friend, my new best friend in stocks, dividends, and options. Please make sure to subscribe to the channel. I'd love it if you did. If you can like the video, leave a comment, and then share it with a bunch of lovable friends. That would be fantastic. And you know what? I'll see you in the next video. Have a great day, my friend.